The Nasdaq has erased a 3% decline to end up by more than 3%. Yesterday, it was a decline of almost 3.5%, ended up by about 3.3%. Joining us right now is Jim Paulsen. He is Chief Investment Strategist for the Leuthold Group, and Stephanie Link, who is Chief Investment Strategist and Portfolio Management at Hightower Advisors. Of course, she's also a CNBC contributor. And Jim, you said something that I think is pretty important. It's difficult to make a call when you've seen the volatility in the markets at this point, but you think we are nearer the bottom of things than the top on this. You think we've kind of gotten through what's going to happen with the correction at this point?
I kind of do. That's my bet. I'm not saying that, it's not going to be volatile here for a few more weeks, but I think investors should probably try to stay away from thinking about what might happen in the next 6 weeks and stay focused on where this could be in 6 months. Becky, I think we've been in correction for almost a year. And if you own small cap stocks, Russell 2000 stocks, it's the same level of day as it was at the start of January of last year. The same thing for international stocks. The S&P 500 has been flat since May. Everything's been washed at some point. If you're a small cap, large cap, growth, value, everything has gone through. The VIX index has had 3 trips above 35 intraday since Thanksgiving. It's been mostly above 25 over that period. Put call ratios through the roof. AAII bull bear is minus 20 on a 4-week average. The institutional bull bear is at 1. All those are signals that sentiment's been washed out, I think, pretty badly. There's fear and caution. And at the same time, we've done a lot of good stuff in this correction, bringing valuations down, removing the concentration of leadership just in new era stocks, for example. And all of this is happening while fundamentals, corporate earnings, economic growth continue to drive northward. And it doesn't look like this crisis, at least now, is going to bring that down. So I think it's time to start picking away and thinking about buying today for where you might want to be in 6 to 12 months.
Stephanie, you were doing just that yesterday morning, at least. What were you buying?
Yeah, good morning. I've owned Facebook for a while, so it's been painful, but down 38%, trading at 8 times EBITDA and 14 times earnings. I thought that was due for a bounce. J&J is such a wonderful company, and you never get it cheap, Becky. It's always expensive because it's such a good company it's just blue chip with a great balance sheet. I like the spin that they're going to be doing, and it now trades at 15 times earnings and almost a 3% dividend yield. And Broadcom, I still like parts of technology, even though I'm underweight, but Broadcom is down about 13%, trades about 17 times earnings, and its end markets are part of some of the most exciting parts of technology. 5G, data center, cloud. We all know the stories there. And it's a great management team, and they did increase their buyback and increase their dividend last quarter. So I like the trends there.
Part of the thesis yesterday was that maybe the Fed would be taking 50 basis points off the table. That's what Mohamed El-Erian said yesterday here. Stephanie, I don't think you're quite as convinced of that, are you?
No, I'm not. And yes, you did see yesterday in the action was a total reversal of everything that hasn't been working year to date started to work, right? Mainly it was technology and growth. And it is because people thought that the Fed wouldn't be as aggressive. I never really thought they were going to do 50 basis points the first go round anyway. I do think they're going to have to do at least 4 to get back to normal policy. But I do think that they are also behind the curve when you look at all of the inflation statistics, not just CPI, not just PPI, looking at services, looking at goods inflation. I mean, goods inflation at 13%, services at 7.8%, core PCE, all of these things, they have to have to probably act tighter than expected. So they'll do 4, I think, and then they'll look at the data to see. And I think the data is going to continue to be high inflation and a little bit better growth.